is Teddy from thefinancialbulls.com with another bi-weekly or weekly market recap and some setups. And it's actually going to be a little bit different today because, as you notice, my chart platform is a little bit different. It's still free stock charts, but I've kind of been reading a lot the past 2 weeks, and I've kind of changed my strategy a little bit where I'm not so technical analysis based, but more trader based in a way. So as you can see, I took away my moving averages and I put on exponential Bollinger Bands. And I used to be this kind of, I know, I just been reading like a Paul Tudor Jones, and there were some quotes, and there's this interview that he had that really had an impact on me, where he said to be a good trader, you have to be a contrarian and to kind of think independently. He also said sometimes markets look best when, some people think that markets look best when they're hitting 52-week highs. He thought that was the best time to sell, and he also said to trade turning points. And I've kind of, I'm not just blindly following that advice, but I feel like our market is kind of, my experience with the market has kind of led me to the same conclusion as well. And while any system works, day trading works, technical analysis, chart pattern recognition works, um, fundamental analysis works, whatever works for the individual trader, I'm just kind of getting into the habit of trading oversold and overbought stocks now. Instead of following the trend and buying these breakouts and breakdowns, I just want to see if I can work at being a contrarian trader in a way, taking advantage of oversold opportunities and overbought opportunities with strict criteria for getting in and out of a trade. I mean, as you can see right here with the S&P, we've had a crazy year. I mean, you can just see here with all these breakouts, and I feel like so many people know what technical analysis is now that it's kind of not as effective as it was before. That's another thing that led me to go toward another type of trading, which is I want to trade, with the algorithms, with the HFTs, with the hedge fund guys. To maybe if we go past a level, let's say we break out and then it comes back below that level. From false moves come fast moves, so that's a fake out, and the stocks tend to move very quickly from those false breakout levels. So as you can see right here, we had a breakout, then we just come right below it again. Recently, I like trade these false breakouts. We had a breakout here, went above it, and then just came right back below it again. You have another false breakdown right here. Everyone's saying, oh, sell the breakdown. Nope, just comes right back above and rallies. So the market's been this funky fashion where there's a lot of fake outs of retail traders, in my opinion. So right now, I mean, probably like to buy near the lower part of the Bollinger Band. So prices are actually pretty attractive right here, near kind of support, but it's kind of a wishy-washy market. Not up, not down, just kind of consolidating in this fashion right here. So I'm neutral on the market in the short term. And I don't have any setups right now for next week, but just to go over some setups that worked before with this new kind of strategy is I like to use, I'm researching I know these sound crazy, but the psychology to me makes sense and it's been shown to be working. The dark cloud cover and a piercing pattern candlesticks. So an example is VDSI right here, or a better one is, you can see the date that I added these. So I was looking short. So GPK 1229, I was looking short. This was right here. So the short signal was here. Why did I say that? And then you had a nice weakness. And yes, it's going against the rules. It's selling in an uptrend, but just like Jones said, you have to kind of be this contrarian. And what you have here is, I believe, 1229. So yes, this is the 29th. Is this hourly chart right here? You have a breakout, and every other time, I'm gonna go to a different example. Sorry, there are a lot of examples. I had that short at that point. Google, that was great. This was a good example. Here, I'll use Google. Google's a good example. So as you can see, this was the day right here that it got on my radar. So it's kind of near the upper part of the Bollinger Band. It's kind of went from oversold to medium, not really overbought, not really oversold, just in the middle, but it had a nice run. And every time each bar closed above the previous day's high, you had buyers sweeping in. But then this day right here is you had a breakout above the previous day's high, but the bulls couldn't hold that. So it kind of faked out a lot of people. It faked out momentum traders right here. So as you can see, Some people bought the breakout, and then once it retraced below that, you have this picture of weakness right here, which a lot of people made a lot of money on. Another example, EMES. This is a perfect example. So this is called the dark cloud cover, as they call it. That's what I'm kind of describing. So like right here, that was the same day that I saw this on the 29th as a short, and it went from $60 all the way to 47. So what you have is a breakout above the previous day's high at the end of this, uptrend, this short-term uptrend, and you had that breakout, and people expect higher prices, but then the stock just rolled right over, and everybody who got long is caught. Everybody who bought to cover after shorting it right here is now reshorting, so you have these really fast moves down after these false breakouts. All the retail guys are buying up here. All the institution guys are selling on this breakdown right here. And as you can see, it's the reverse here. This is the piercing pattern where it goes down and then rallies back up above that previous day's low. Then you saw this nice rally. Same pattern happened right here, and the stock went from 83 to 43. And you just have example after example of this happening. And I know it was the 29th, and that's when the market kind of turned down in general, so you could say, oh, well, it's just the market. But then you have stocks like VIPS that rallied on the 29th. See, this was the 30th. It had this day right here where it reached the previous day's low but couldn't stay below it and rallied above it. And that's when it got on my radar. And ever since then, it's gone from $19 up to a high of 22 in a few weeks. But it was this day right here, buying on the weakness, taking advantage of really bearish sentiment and being a contrarian to place a calculated, risk averse trade. And you have lock right here. This was the cool one. This was classic. Dark cloud cover here. Overbought, way overbought outside the Bollinger Bands. Then you had a rally above the previous day's high, couldn't hold, and then the next day you went from $8 to 15. So that was something else, but I think that fundamental move was only enhanced by the price action the previous day. So just for a short video, these are the type of patterns that I'm trading now. False breakouts. It's kind of, I feel like technical analysis kind of played out in my opinion, and I know a lot of technical analysts will say that's ridiculous, I'm making tons of money, and you're right, there are tons of chart pattern recognition traders making tons of money. I'm just saying, personally, I don't think it's best for my style of trading, and I wouldn't recommend it now. I know that's a huge 180, and I've completely changed my mind in the past 2 weeks, but I feel like this is working. I feel like if you listen to the top traders, you have to trade what they're saying. And like Paul Tudor Jones, what he said is he says, sell 52-week highs, be a contrarian, be confident in your decisions. And I just feel like that's the best way to go about it. And also, taking advantage of buying weak stocks and selling strong stocks. It's kind of a good way to go. I'm not going to follow the crowd. And I mean, there are some, bull flags that are watching and bear flags. But like, look here, do you really want to? I don't know. I don't know why I was trading this before. You can see there's a false breakout right here. I was looking at this bear flag, breaks down below, but then just rallies back up. It's like a lot of retail traders know when they see the bear flag, so it's not going to work. It's too easy. You're like CNC, same thing. You have this bearish consolidation, and he broke out of it recently. I was looking, but that's just ugly. I mean, you had that breakout here, and then it just comes back down. I just feel like it's not 1990 anymore, where Dan Zanger can make a ton of money just trading chart patterns. There's so many people see this. Everybody recognizes that this is a bear flag or bull flag. It's not going to work. It's going to fail. But if everyone thinks that the S&P is going to break out above here, above the highs, it's not going to work. And I like the psychology of the traders fading that breakout, which was the profitable trade. Or as you can see here, what stock was it? VIPS. So after this huge weakness, other people say, oh, time to get out. Stock's weak. Sell weak stocks, buy strong stocks. But no, that's the time to buy right here. And then look, have a nice rally. That's where the smart money's buying, taking advantage of the retail traders who get, pretty much just shaken out. So thanks for watching, and don't get too mad if you're a technical analyst. It's just that's personally what I feel. But I fully understand that I'm not gonna look guys like what was it, Marty Schwartz, who's a top technical analyst, or Dan Zanger, and says technical analysis doesn't work. It does for some people. For me, I kind of think the risk reward is more skewed in my favor when I'm buying at really nice entry points on buying with kind of the institutions and not kind of being suckered into the normal chart pattern stuff that most retail traders are. So we'll see how it works out. I'm new to it, and I'm just showing you some examples of it. But right now, overall, the S&P near the lower part of the Bollinger Band, so short term I'd say bullish actually, and the market gave back. It had, today, what did it do? Yeah, it kind of went down below and it rallied a bit. So, short term, why not? I'd buy a few. I'd buy a few contracts if I could. So, thanks for watching.